Okay, so this is just a quick video on the meme stocks, the recent meme stocks, mostly focused, originally started, I guess, with the Reddit Wall Street bets, and I don't know if they still, if that's the driver or now, or if it's just the general, what they call meme stocks and the most active on their chat boards, and away they go. What I guess what's important about the meme stocks is that, and we'll use that just term as a broad general way to describe these ones that have been the retail traders that got into these and pushing these stocks. And originally, what it was, they were looking to, I suppose the premise was to punish short sellers and squeeze them, and they really did. Obviously, with the GME, this thing came from 3 to just about 500, from $3 to 500 in a year. But really, it started to take off, I suppose, more in the January. In January, it was trading around 16. A huge short position. The chat rooms got a hold of it. The Wall Street bets gave a rallying cry. Everybody came into it. And so, I mean, when you get that kind of broad participation at this lower end of the price, $16, it gave it a big spike, it flagged, and then the shorts had to come in. Then this is where the hedge funds and such really started to sniff out that there was going to be a big squeeze here, and they came in with, because there's no way that this stock trading up at $400, $500 was the retail buyer. It was, once it started to get squeezed, then it became the hedge funds and institutional players, and then a big battle between the buyers and the sellers, the long hedge and the short hedge funds, until eventually it ran out of steam. I mean, it was so out of whack from any kind of fundamental pricing that eventually the greater fool than I am theory came into play, and they're probably up at this level. Wasn't much buying done by the institutions and the hedge funds. What it was short sellers selling to shorts that are covering. That's the total volume, with the Wall Street bets retail traders in there a little bit, but not enough to give it any influence. The market influence, not at a $500 stock, and the volume was trading. Traded at 500, it was traded 80 million. At 500, that's a 4 billion in volume. That's not retail trading. That's big institutions with big books that can trade it. I just want to give a sort of a broad overview first on what it means. The recent one was the interesting thing about GME, though, I'm sure the company is going, thank you, Lord, thank you, Jesus, for bringing these buyers into our market, because they did manage to retire $500 million in debt by selling stock and doing a financing. So, and this was the same with the AMC. This is, it declared bankruptcy, double bottom down here at $2, and then the meme buyers got a hold of this one because it had such a big short position on it, squeezed, and then boom, off it went. They also were able to raise $400 million based on the volume. Look at this thing, traded $700-800 million a day. So they did a direct offering, and they were able to get their fund their company. Now it might trade on a different level with the fundamentals. With that, $400 million in the bank, it changes the story for it. But again, so what I think has shifted here, though. And so let's just go look at a few others. The BlackBerry was a big one, went to 30. KOSS popped from $3 to 125. Again, this isn't the retail buyer here. This is the big hedge funds smelling blood. So now what I think has happened is there's a much broader participation in these stocks now, in the sense of when the call goes out, whoever gives the call, when the call goes out, who's watching that message board. I mean, look at the CLOV, and we traded this the other day, just yesterday, and made big money on this trade. How we saw that, we heard, or I saw that this was the meme stock that everybody was talking about. It was very strong in the pre-market. We're not the only ones that are watching this, and we're not the only ones that saw what happened to GME, AMC, KOSS. We're not the only ones that saw these moves, and so everybody just jumps in, and so whoever promotes this, and I'm sure there's lots of people trying to promote it, trying to say we're the meme leaders, we're the Wall Street bet gurus. You need to trade what we're talking about. I'm sure there's a lot of those out there, but whichever one they catch on to, you're finding that they're heavily shorted stocks, so you're going to get a squeeze. The thing is, they don't have any catalyst, so it's strictly the greater fool than I am theory. You buy it in hopes you can sell it to somebody else at a higher price. And the only way to trade, and these things, they don't trade like a typical, like there's the patterns just really go out the window. Now this morning yesterday morning when we trade this, we were watching this, it was basing, but then it did pop. But and it was through all the kinds of resistance, so it didn't really have a there was no sort of gauge to where this could go. But it just kept going and going and going. There's no real sort of pattern. You just have to, when you see these things go, you just need to jump in them, hold your breath, plug your nose, and go with them, and be prepared for extreme volatility. Now, when it did top up here, this was a pattern that we could trade and we knew about. The Twin Towers double topped in here. Next candle's red, you need to get out of the trade. Sure enough, the party's over, and it made this 5-wave move down. And then capitulation, bottomed, held support, and then traded back up. And then just traded sideways for the rest of the day because everybody's gone home. All the big players made their huge money in here, and then the retail traders who were left got whacked. They tried to run it again, but with in the midday and stuff. Now it did trade back up after hours, to try to go again after hours. But the key thing is when these things, it popped, when it flagged and it popped the flag, that is a pattern you can trade. But once they get going, there's no real pattern to them. They just go as everybody jumps into it, and then the shorts get a big squeeze and off it takes. When we see the tops, that's when we know, when we see a topping pattern, we know that it's over then. But till that point, you just need to jump in and go and let them run. But of course, it has to be the one that's popping. Just one moment. The other thing that happens with these, that happened in this last round with these meme stocks, is that the past meme stocks, the BlackBerry, Tilray, EXPR, KOSS, AMC, whatever they were, all when the CLOV was going, they all ran in anticipation or with a view that these were past runners with the meme call going out, the moose call going out, and off they took, and so this Tilray, it actually did trade big. It went from 17 to 22. It added $5. In 2 days, pretty good move. But once the CLOV was finished, and or maybe it was the AMC, doesn't matter. Whichever one is their call for that day, when that trade is finished. And we did that a lot with the GME. We saw this when the GME, AMC, and KOSS were running. You had to keep the GME chart up full time, because any movement in GME, it was immediately translated, or you had about maybe a 30-second window to act on the smaller stocks, AMC and KOSS. So you have to watch the key one, what it was doing. And when it was running, the other ones were running 30 seconds later. When it sold off, you had 30 seconds to get out of the trade. And we did actually some live trading on that, I wrote it in the chat room, and we saw it in real time, how the market was coming off, and we said, okay, you got to get out of the other stocks before they dropped, and that's what it was. We had a 30-second window. So when the CLOV was running, or whichever one was the hot one for that day, the Tilray popped. A few others of them popped. BlackBerry popped. But when they started to come off, and we see here, there's no follow through. Now maybe the story has changed for the Tilray. Maybe they put some money in. The pot stocks it's a good looking chart. But the point is, when those stocks, when the main meme stock was running, these other ones ran in sympathy. But when that was over, we can see that they sold off and came back. So, but again, on the Tilray, to trade it, we just jumped into it. We didn't, we just held our nose. And when it started to take off, you just jump in and go as far as you can with it. Up here in the second day, you can see it was a huge, super volatile. And so I think that's the other sort of, that's one of the other big indicators of these or one of the big traits of these meme stocks, is the absolute volatility in them, how they take these huge swings. And the reason is because there's no fundamental reason for them to be running. It's strictly a pump and a dump. This stock spiked from 20 to 21 to 25, so $4 in 2 minutes, and was back down, lost that $4 in the next 2 minutes, and then actually within 15-20 minutes, it was down to 16, lost at $10. Extreme volatility in these, and in the intermediate of it, you can see with these candles with these big long wicks and closing, sort of mid-range. Look at the volatility, these big up and down, wide spreads. This is very difficult to trade. You have to have a lot of nerve to catch them and to stay in them. And so then you have to decide, well, what's just the volatility and what's the change in direction? But all these candles with these big long wicks, that's a sign of extreme volatility. And so you have to be able to withstand those big movements like that, and stomach a big shakeout or move on it, not within a relative period of time, not a move. I mean, once this double topped up there, it was time to get out. You're not waiting for this to pull back to 16 before you decide to enter. You need to get out of it right away. But these individual candles here, that have, like this candle here, it's a 60, 70 cent move in an instant to the downside. You have to be able to, if you're going to trade these stocks, you have to be able to withstand that kind of move, and then, to stay in the trade and let it run, because look what happened. It did pop out of there from 21 back up to 23. So there's just some suggestions and some ideas on trading these the meme stocks. And if you're not in the webinar and you're going to be watching this on the YouTube, give us a like and click on subscribe.